Hello traders and welcome to another video review. Today is Wednesday, March 26, 2025. Let's take a look what do we have on the economic calendar for today. CPI data from the UK are worse than expected, 3%. Actually, it's 2.8%, and the quarterly CPI is below the forecast of 0.5% with the actual number of 0.5%, which is still bigger than the previous reading of minus 0.1%. Spanish GDP in line with the expectations, 0.8%. European Central Bank non-monetary policy meeting minutes starts at 9 o'clock. Then 2 hours later, spring forecast statement from the UK is being expected, and then we just simply jump to the New York session or US session. Core Europe good orders are scheduled for release at 1:30. The market participants expect that increase from 0 to 0.2%. Wholesale orders are scheduled for release at 1:30 as well. This time this data are from Canada. FOMC member Kashkari will give a speech at 3 o'clock. 30 minutes later we got another very important event of the day. Crude oil inventories are scheduled for release at 3:30 together with the Kashkari crude oil inventories. Atlanta Fed GDP now data are scheduled for release at 4:30, and at 6 o'clock we got 5-year note auction, and that's about the Wednesday data that are scheduled for release. So without any further ado, let's just get to the charts. We start with euro dollar. 4-hour chart of the euro dollar continues the corrective wave to the downside. We've been seeing the market moving as low as 1.0778, so just like 12 pips away from the technical support at 1.0766. Right now the market is still inside of the range located between the technical resistance at 1.0942 and the technical support 1.0766. We are waiting for the momentum to increase, pick up above the level of 50, and then the wave 3 can be continued. So let me just briefly tell you again that right now this wave down is the internal wave 4. So we are waiting for this internal wave 4 to be completed. So the last wave to the upside should be the wave 5, and the whole big wave 3 is completed. Then bigger correction should be done, and the last wave to the upside is next, the wave 5. Right now on the daily time frame chart, the market momentum is at the level of 56 points, so it's not that bad at all, and we are waiting for this momentum to pick up a little bit in order to complete the wave 4, terminate wave 4, and start the wave 5 whatsoever. Now, cable. After the data, let me just take a look at the 4-hour chart. After the data from the CPI data, the market participants, as you can see, are quite bearish, to be honest. The momentum is down to the level of 38 points as we approach the low of the week at 1.2889, and a breakout lower would likely put the level of 1.2860 for a test, and then even eventually 1.2834. We are straight on below the 4-hour time frame chart 100 periods moving average, which is at 1.2917, and we keep moving lower as the momentum drops. So maybe we will need to have a deeper correction. Please notice the fact that we are still in the upper half of the channel, uprising channel, and as long as we stay above all of these trend lines, technical supports, horizontal technical supports, the outlook remains bearish, because most likely we will hit the extremely oversold conditions and the market will be ready to continue to the upside. So British pound looking bearish in the short term, but bullish in the mid term. What is going on gold? The gold market is right now trading very closely to the level of $3,027. The wave 4 to the downside looks like it has been completed. However, there is no immediate impulsive wave progression to the upside just yet. So the wave 5 hasn't started just yet. We got this technical resistance roughly around 3033, something like this. That's the short-term technical resistance level. Any breakout higher would likely cause the $3,057 swing high. Very susceptible for a test, right? So any breakout higher would means that we are developing the last wave to the upside in this impulsive structure, which is of course the wave 5. So the gold is looking rather bullish as long as we won't break below the wave 4 low, 2,998. Bulls waiting for a breakout. Now, last but not least, let's take a look at the Bitcoin. Very interesting situation, because on the 4-hour time frame chart we broke above the trend line resistance. We tested the supply zone, the old supply zone. Then we come back to test the trend line breakout from the upside. The market bounced. However, there is no immediate resumption of this very nice swing to the upside. There is no further penetration of the 90,000 supply zone. We just stuck inside of this very narrow local zone with quite positive momentum, 65 points right now. So the bulls are still in charge of this market, and maybe just later on they will try to move higher to test the supply zone, eventually breaking it and then targeting the next level, 93,377. But for now, the market keeps consolidating and moving sideways for now, at least on a 4-hour time frame chart. So as long as we stay above the trend line, the outlook is still bullish. However, we need some trigger that would eventually give this momentum to the bulls and show them that there is more to the upside, and then the breakout above the trend line on 4-hour time frame chart might be productive, basically. So much effort was put into the breakout above the trend line, but there is no follow through. The 100 periods moving average, which is blue on this screen, is still moving lower, is still showing us that possibly the top is already in place. So any breakout higher might be just a correction, upside correction during the downtrend, especially if it looks like this, if it looks rather corrective than impulsive. How much did we actually went up? How much did we went up? Where is my price range? There you go. The price range from the extreme low at March 11th to the yesterday's high is 15.91%, which is not that bad. However, which is not like astonishing result of the bulls, which means that maybe, just maybe, if there will be another failure here to continue higher above the supply zone, the market might reverse and then penetrate the lower zone here. This zone is of course located even below the $70,000 per Bitcoin. So please stay focused, as we still have the last long-term demand zone up for a test. However, we might see first the test of the supply zone and then reversal to the downside. Only a sustaining breakout above supply zone, above all of these technical resistance levels, and above the 100 periods moving average might spark more hope, might spark more FOMO on the Bitcoin market, as we see it is rallying again. Maybe even the all-time high in that situation would be very susceptible for the test. However, as long as we stay around these levels here with only a mere 16% basically jump or a correction, upside correction, then the bears are not doing basically as good job as we want them to do, and they stay below the key crucial levels from the technical point of view. So very good time to keep an eye on the Bitcoin, stay focused on the price action right now on this chart, on the daily time frame chart. Stay vigilant, because we might be very close to the situation, to make or break a situation. So either they will break above the supply zone or they will fail yet again. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.